Hey everyone, Jim Brees here from GreenGrowth CPAs, and thank you for taking the time to join the third part of our three-part series about sales tax. So in the previous two sessions, we covered a few different things, the basics of sales tax and why it's important that you actually accurately collect and calculate these sales tax, as well as a distinction between origin-based versus destination-based states and how those intricacies can really play into your CBD or cannabis business, especially if you're a delivery company. A lot of helpful information. And today we're going to hit, what do you do when an audit actually happens from your local cannabis sales tax authority? So if you're in California, expect these things to happen January 2021 because they're trying to build up more and more liability for these cannabis business operators and have to hit a certain threshold. So lots of things coming here, lots of great discussion this afternoon. Our special guest today and presenter, Peter Mantell, thank you very much for coming on and doing these webinars for the community this past few weeks here. I've just been blown away by some of the things you've been sharing with us.
Thanks so much. It's a pleasure to be here. So now we're going to talk about the dreaded case of what do we do if we hear from an auditor? Now, first and foremost, this is not unique to California. This is anywhere, this sequence. So this portion of the sales tax conversation we're going to have here is going to be any state, any and every state. And so you understand my background in this area. We've been doing audit defense for upwards of 40 or 50 plus clients over the last 3 years. We really started out in the e-commerce space and since then have expanded into now the cannabis space as well. A couple things to keep in mind right out of the gate. First thing is that, so we get either an audit request and that can come through a couple different avenues. The state's preference normally is they're going to mail it to you. And what's going to happen is it's going to be what they call a nexus questionnaire. So they may say, Jane Doe, John Doe, we noticed that your business is, operating in our state. And we feel like the numbers are off. We'd like to take a look under the books at some point. When can we meet with you? That's one way they'll do it. And the state's preference generally is to mail. They'll also follow up. They'll have what they call, some states call it a tax technician, other states call it, an analyst or support personnel. But they'll also have people in a call center follow up with your business if they have that information. So, and that's stuff they can grab easily from, for example, your articles of incorporation. If you're incorporated in a state, that's public information. So there's a lot of ways that these individuals can go about getting that information. It's not complicated. To give you an example of how aggressive a state can get, we had, using an e-commerce example, I apologize, but it's a good example for you to understand. When states want to go after money and they want to be aggressive, we saw CDTFA of California subpoena Amazon, which is a 10,000-pound gorilla, into turning over all third-party seller data. Amazon put up enough of a fight to say, hey, we don't want this to happen. But eventually they seceded, they gave in and gave the data over to the state. And then in 2017 and 2018, the state of California then started randomly handing out nexus questionnaires to anyone and everyone because they could, because they have the data and they have the points to do something like that. Now, how does this apply to you as a retailer? Well, let's just say, as a hypothetical, you're in the CBD market right now, which is not regulated, and you're mailing product into California, and maybe you're not located in California. Well, guess what? You need to collect your remit sales tax, depending on the volume sales you have in that state with the CBD products. So there's a lot of things here to take into account when you're looking and evaluating this stuff. So let's go into what you do if you hear from a state. First and foremost, do not panic. I'm going to repeat this again. Do not panic. Take it easy. Take a breath. Drink a glass of water. Whatever you got to do. Calm down. Walk away. Come back in a couple of minutes. The states want you to. They're going to use very strong rhetoric. They're going to use very strong vocabulary. It's going to sound very threatening. They're going to use words like lien, levy, criminal offense, blah blah blah, etc. This is all meant to scare you. And so one thing to understand in all this is that, and I always say, to anybody, treat this as if a police officer shows up at your doorstep. He or she is fact finding. They don't have their case if they're showing up there. If they know what they want, they're going to arrest you without questions. So oftentimes an auditor or any state representative, the first thing they're doing is they're going to do fact finding. So I always say, and part of my language, but keep your mouth shut. Don't say anything. There's nothing that you need to say at that moment to that person that they need to hear that can't wait another week or two. So never, ever disclose anything. The first thing you do is you get your accountant, CPA, state, local tax expert, SALT, whatever it is that represents your business on this matter. You get them on the line before you talk to anybody else. Not even family members, not friends, not business partners. You get the accountant on that phone ASAP. That's the first thing you do. And then, some people think that they're good at what they do and they'll try to handle it themselves. I have seen businesses get massacred by the state because they didn't know the interstate workings. They didn't know the laws. States start bullying the business. And before you know it, the business gave way too much data over to the state, and the state had more than sufficient to go after them. So again, in this environment, data is king. The state's going to do everything within their power to pull it from you. Your job is to get an expert that knows what data they should or should not submit. I'll give you an example of how I've seen this work out. So when California, that e-commerce example, we're going to go back to that. When California started auditing these different random retailers, the state said, well, we want to see all transactions across the U.S. And in our audit defense, we always tell the state, no way, not happening. That's just not going to fly. We'll give you California pertinent data, which you are legally allowed to request, and we will supply and work with you and collaborate and cooperate with that. But sales into, if they're not domiciled in California, so let's say you're a foreign retailer to the state, we're not turning over anything other than what the state requires to make an assessment. Sometimes the states will ask to look at your financials, your P&L. And cooperating may or may not make sense depending on what kind of benefit the state's offering you for cooperating. So these are the kind of things that you want an expert to know what they're doing in this environment to make sure the state doesn't take advantage of you. And when they'll ask for your national sales, they'll make it sound very routine and that it's very normal. Don't believe that. That is, the state has no oversight jurisdiction over sales outside of your home state, for starters. And then secondly, for any sale, if you're domiciled in California, that's a bit different. But if you're operating outside of the state, then they have no jurisdiction. So the big thing you're going to see more and more of, especially if you're doing e-commerce related sales with CBD, or as the market continues to open up, you're going to see what they call nexus questionnaires coming out from states eventually. So if you're moving a certain volume of product in another state, which can be anywhere from $100,000 or 200 transactions, whichever comes first, that's the average. Some states are different, they fluctuate, but you will then have a responsibility to collect remit, and the states aren't messing around in this front. Now, the next piece, make sure that whoever you're hiring, CPA or accountant or SALT or state local tax expert, it has prior audit defense experience. I mean, going in, I'm reminded by one of the commercials I recently see. The doctor walks in and say, "How good are you?" And he says, "Well, I'm good. I'm just okay." And the guy's getting ready to go into surgery. He says, "Don't worry, we're gonna work on this together. We'll overcome this. This is my first time back since I lost my license." You don't want to work with an accountant or somebody that is, I'm just okay, or I've done audit defense, once a long time ago. I just need to brush off the rust, blah, blah, blah. We're talking about your business and your livelihood here. We're talking about the state potentially putting a lien and levy that follows you for the rest of your life. And so to that degree, do not risk that on saving a couple bucks. This is an area where you get what you pay for. And so don't cut corners when it comes to this type of situation. Now, the next thing that we see a lot of is people go into full-on panic mode. And they'll just completely disregard the letter they received. So in other words, they'll say, "Oh, I never got anything from CDTFA. I don't know what you're talking about, this whole audit thing. This is the first time I'm hearing about it." Well, in this kind of environment, ignorance is not sufficient enough to be sufficient grounds for the state to ignore you. So in other words, the state doesn't care whether you received it or not. They're just going to follow up and say, "That's your problem. If the mail carrier didn't get it to you, we've sent multiple correspondences. You haven't responded to any of them. Not our problem." And so the state, to that degree, there's been cases where the paper didn't make it to the clientele, and the states are famous for having incidents where something went awry and it didn't make it for some reason. Again, in this environment, that won't be sufficient grounds for you to say mea culpa. The state's going to come after you on this one. We have other people too that are just like, "I'm just going to ignore, because I don't think the state has the right to come after me on this one." And so the way that all works then from there is that what the state's going to do in that kind of environment is, first and foremost, they're going to they're going to send you warnings and say, look, you need to talk to us, or else. And if you continue to ignore them, then what the state starts to do is they start hitting you with what they call assessments. So in this environment, they're not going to wait for you to respond. They're just going to start hitting you with the maximum amount the state can. So they're going to say, okay, we still haven't seen your books, so now we're going to hit you with a couple $1,000 in P&I this month alone, and then we're going to hit you with it again next month. We're going to hit, going retroactive if we want to. They're going to hit you from left, right, side, top, bottom, whatever they want to. And all of this is meant to get you to respond. Now, ignore them when they hit you with the assessments, and guess what they do? They follow through with those assessments. So then they go to the banks. They go to anywhere you have assets, and they lien and levy those assets wherever they can. So it's not just enough that, so once they hit you with that assessment, until you respond and go through the audit process, that dollar amount they're assessing you is what you owe. And that assessment will continue to aggregate and grow until you eventually respond to the state. So they'll just keep hitting you, going into your accounts, taking the money, just continuously slamming you until you respond to them and eventually work with them under audit. So the state has a means to make you or compel you to comply. And so that's why we're saying, do not ignore, do not disregard, do not pretend it didn't happen. Everything, again, go to bullet point number 3. Make sure the expert has a prior experience, knows what they're doing, and make sure you get an expert. 2 and 3, those 2 key bullets. Get an expert to support you, and make sure that expert knows what they're doing.
Yeah, I mean, one thing you brought up, I think in a previous video or one of our conversations, that California, I believe it was California, has auditors in other states. You're not just
Correct.
sitting, I'm in New York, like they're 2,000 miles away from me. Don't worry about it. They have an office like in New York that they'll just pull up to your place of business if you really try to avoid them enough.
Yep, we've worked with the New York office. We've worked with the Illinois office. We've worked with the Texas office for California. These are all divisions of California. So California is so hyper aggressive. They've deliberately put their own personnel in these other states. So they're right in your backyard and they can show up at your doorstep. So the next thing we're going to do then is we're going to discuss, okay, the state has contacted you. You got your expert up and running. He or she is preparing their case and what needs to happen, how this all plays out. So then, as a retailer, as the person being protected by this, by your representative, what does this mean? What to expect from the overall process? Because this is extremely terrifying for business owners. This stuff is where you feel out of control. You don't feel like you know the situation. And so for many business owners, they're just panic stricken because they don't know what to expect. So now we're going to go over, if this happens, you have your representative, we're going to educate you on to know what to look for, from your protection, from your CPA or from your SALT. And then also, as the process goes on, what should you be expecting as part of this process? So first and foremost, whoever's representing you should always be getting a POA or power of attorney in advance. And the reason is that once you get the POA or power of attorney, now there's a shield or intermediary between you and the state. This means that the state no longer has grounds to come to you directly. They have to go through the representative that you have authorized to cooperate with the state on behalf of your business. So the first thing there is now you've shielded yourself. If in the environment you have a power of attorney in place and the state is trying to circumvent your power of attorney, your representative, and they're going directly to you even after you've spoken with the state multiple times, this is grounds for you to go after the state because they're not allowed to legally. So in other words, if they keep trying to come after you to get you to give up the information because your accountant knows better, and they're hammering you and they're leaning on you, continuously, first and foremost, my CPA or my accountant or whoever it is has power of attorney. Please take up any and all matters up with this individual. Do not say anything to them. They know better, and also let your accountant know, because if they're doing that, in my environment, in my experience, I've had a couple of cases of that happen, and I was on the line with what they call SOUP 2 or whoever supervisor within whatever organization, and you can bet the bank I was raining holy hell in the entire state because they were doing something unethical and illegal. So there's ways to handle that. Again, POA is critical. Power of attorney. Get the accountant in front. Get whoever it is in between you and the state. Next thing is the party that represents you is going to need you to disclose any and all transactional data from day one. You have to have this in record somewhere. They have to have some means to get this information. If you withhold that information from your accountant, you have set yourself up to failure. Because what's going to happen, these auditors are not dumb. They're very smart. And they've been taught tactics to look for, what to look for and when. They're going to look to match it up with different financial statements and other items. And if you can't match it up, they know there's a delta, then they're going to dig even deeper into your information. So now you've made a bad situation worse. Then they can go in, they'll say, okay, the client is not cooperating, treat him as a hostile client. That's when they can just say, I'm going to show up. That's when they can have the right at that point to show up at your office with your accountant or whoever and just go through all your records at that point, paper, anything they can get their hands on. So, you really, the more cooperative you are up front and the more data you can give to your representative, your accountant or CPA or SALT, state level tax expert, their job is to protect you. That's what you're paying them to do. Don't withhold anything. They're going to walk you through it. On our team, we have 2 ex-CDTFA auditors, and they'll be the first to tell you, keep your mouth shut, don't say anything. And they've also had experience. We've all had experience where the state tried to bully, and then we pushed them back, and then all of a sudden the state realizes they weren't going to be able to get their way. So again, this is critical. But the other thing we can do too is, depending on the category that your product is in, it may not be subject to sales tax. So it might be, food may be exempt or reduced. There may be unique types of laws in relationship to the product that you're selling. And so you might be able to get savings. That's what the representative's job is to do on your behalf when you're doing audit defense, is to save you as the client as much money as possible from having to pay to the state. Now, any monies that you do pay to the state, and that goes sales tax also, just as an FYI, is tax deductible. So in the future, make sure if you do get any amounts that you owe to the state, make sure you account for it in your future filings. Now, the penalties and fines are not sales taxes, or not tax deductible. Those are at full amount. But if you pay back good sales tax to a state for something out of your business's expenses, then you can reduce that from your income tax statements as well, offset that. So some things to remember on that front. Next thing is, so you've gotten your accountant the information, they've been able to review it, they have compiled it, and they have then put it together in a fashion and format that the state can then accept, with the expectation they're putting the lowest amount possible in at the time of the, based off of the state requirements. So what then happens is that it's going to go to the state, it's going to go to the auditor. Depending on how busy an auditor is, will dictate how long it takes for them to come back with a response. In the state environment, don't be surprised if an audit takes upwards of 6 months to a year. That's not abnormal. A lot of people freak out to say, okay, we're in audit, where's my response? Where's my results? 3 months into it. And why haven't I, why hasn't the state responded yet? Well, the state loves to drag their heels. And they love to do it because they get to tack up that interest as it takes longer and longer. So they're getting extra money out of this by taking longer. So it's in their best interest to take their time. The other thing too is, right now a lot of states are inundated because they're finding these new niches to go after, which they've never gone after before, and so they're doing it in mass. And they're limited in resources from an auditor perspective as well. So that means that one auditor may have upwards of 10, 20 accounts they're auditing at any given time. So they're going to be slow to respond. We started audit defense for 15 plus clients on the California side in January of this year. And we've only completed 1 out of the 15. Not because we hadn't submitted the data prior, not because anything is being hung up on our side. It's just because the state is that inundated, and they're very slow to respond. So just understand that the timelines for these types of things can take upwards of a year, depending on the state and the resources the state has at their disposal. Eventually, at some point, once they've completed their audit process, the state is then going to come back with their findings, with an assessment. Now, one of the things that we always try to do in this process, many states, if you cooperate and work with them, in many cases, they're willing to reduce the fines and penalties depending on how you cooperate with the state. And so that is part of the reason why you don't want to make this very complicated, and why a good accountant will earn their way, because removing some of that penalties and interest will save you a lot of money, but you're going to pay for that accountant. These are things, not to take lightly. But if you're being rude to the state, if you are telling the state to pound sand, if you're doing anything that the state would interpret as hostile, they will not give you anything. They'll throw the full book at you. As a matter of fact, not only will they throw the book at you, they'll go searching for other areas they can get you. And there's a lot of gray lines in the business world that gives the states openings to go after different types of taxes. So if they want to get creative because you've ticked them off, they will get creative. They have no problem doing that. And so that's where it's our job. That makes our job a bit more complicated too, as well, because at that point, now we're having to finagle the state to get them to come back down to earth. We generally have a lot of very good relationships at the auditor or director level of many different states. But if a client has done enough to frustrate an auditor, and the auditor is properly documented, there's only so much we can do too, because at the end of the day, the state has complete power and has the law behind them. So cooperating and working with them is critical. When the state, they'll once we supply the data, let's say after the year mark, they've come up with an assessment. The state's going to mail that assessment to you. So they're going to come to you and say, here's our findings. Your owed amount is X, interest and penalties are Y and Z, total is going to be whatever. And so then at that point, you're expected to pay that amount to the state. Most states understand that if they hit you with a big enough amount, you're not going to be able to pay it in a lump sum. So a lot of the states will grant you or offer you the capability or the ability to do what we call a payment plan. And that's ideally, most states on average will offer up to 11 or 12-month payment plan. Under extreme circumstances, they may offer greater than, but the downside to doing a payment plan, if you can avoid it, is during the time frame that you're on that payment plan, you're actually accumulating more interest that you're going to have to pay. So during that timeline, it's going to cost you a little bit more, but the whole objective of this is to keep your liquidity because you need that to buy inventory or whatever have you. And so their whole objective is, okay, we get it. So, let's just say hypothetically you owe $12,000 to the state. It might be $1,000 a month versus the lump sum, allowing you to keep that extra money for operational expenses, et cetera. So, the states will cooperate from a payment plan perspective, if you request that in most cases, and you've been cooperating with the state, they'll be pretty reasonable on that front. So that is pretty much everything I wanted to cover in relationship to what to do when, if you receive an audit and how to handle the audit and what you should be doing going forward. So I'll turn it back over to you, Jim, for the Q&A portion, if that's okay.
Yeah, if anybody has any questions, please let us know. Drop some questions in the chat here. This has been a very, very eye-opening experience here. I think one of the things that stands out to me about the audit portion is that the state's going to drag their feet, just to build up that penalties and interest and higher and higher and higher, and allow those things to grow up even further than it actually is. So be very, very diligent in getting this done faster than later. Get somebody engaged, get this stuff moving as fast as you can.
Yep.
So Sharon's asking, what is the average audit cost?
That'll vary by the CPA firm or entity organization that you're working with. It's the average really is starts around the $2,000 mark for audit defense or a VDA, and then it's kind of based off the size of your business. Some companies will do a flat rate. We generally do flat. We don't like we don't like doing contingency or any type of we're charging hourly, because the frustration point for clients is that you just really don't know what to expect from a cost perspective. So we'd much rather have transparent pricing up front, so that then you can build into that. Sharon also asked to see your time frame, 6 months, 1 year to complete. Is the question like how long is the overall entire process, Sharon?
Yeah, so what's you said typically what is the timeline for these audits?
So ideally from when they reach out to you until when you can, to the closure of the audit. Okay, so, so Sharon said the entire process. So yes, the answer is that ideally the average audit defense takes between a year and a half. Some states are much quicker on their audits, where we've seen some pretty prompt turnaround so far on the audit side. I would say, let's see here, let me think out loud. We've seen a pretty good response rate from Tennessee. Texas is pretty on their ball when it comes to audit. Florida's pretty prompt to respond. Let's see here, Wisconsin, Illinois, they're pretty on their games as well. So what I would say is in those environments for states that are on their games, the turnaround time is probably like 6 months. A state like in California right now that's inundated, I would say anything less than a year would surprise me, just because of how busy they currently are as a state. So I would say on the bigger states like California, expected to be a year plus. On the smaller states, expected to be, or some of the other states, you can expect it to be roughly within 6 months. Now, the next question Sharon asked was, what if the accounting firm are amazing, have backup for every transaction, i.e. cost of goods? That's critical. Sharon, you just saved yourself a bunch of money because now somebody doesn't have to go hunt it down. If you have that data readily available, that it's going to reduce your cost, because now you're not going to have to use, your accountant isn't going to have to comb through all your data to find everything pertinent and necessary. So to that degree, that will definitely save you money. And the other thing too is, if you're properly meticulous in keeping your books, you're not leaving any loopholes. The state auditors are trained to look for deltas. They're trained to look for weird actions. They're trained to look for in your personality if you're talking to them. They're trained to look for pressure points. So like if they ask you a question and you respond oddly to that question, they're going to dig in deeper, similar to what a police officer would do. So these are things that they're trained to do. So the thing is that, the more data you throw at them, the less questions they have. And then it's here's everything that you've required us to turn over. Here's all the data points. Here's everything. And generally when we work with somebody in the audit defense capacity, we have a questionnaire they need to fill out prior. What are the platforms you sell through? What are the channels that you use, etc. Everything and anything that we can figure out, we're going to ask that. We're going to look into those things to take that into account. But I would say, Sharon, if you can keep concise records, you're going to find yourself very happy, and you're also going to save yourself a lot of money and a lot of pain in the future. And then one individual says they use QuickBooks Online attached backup to every transaction, which is perfect. That's beautiful. That's exactly what you want to do. And not only do you want to keep these transactions, but you want to keep them up to, I would suggest 8 to 10 years, which is a bit overkill, but here's why. So if we take California as a hypothetical, the de minimis look back period for California's case is 8 years. So if you're looking at an 8-year look back period, you need to be able to supply data going all the way back to 8 years. So, I know in many cases, like from an IRS perspective, I think it's 5 to 7 years. But from a state perspective, you want to be able to handle at minimum, their de minimis look back period. So you have all that data there. Anything greater than 8-year look back period, the state has no claim to make. They can. It's against their laws. So, so it varies state by state, but your record should always at least be for the length of the look back period the state can go.
Yeah, we saw a case actually that came up where I think the look back period was 3 years for the IRS for, I think just like materiality of it wasn't that big, but at any rate, they initiated the audit by sending the letter within I think 3 or 4 days of that 3-year thing, and then allowed them to, and the audit went for I think 4 to 5 years, and allowed them to kind of go way, way back when you look at the relative date of the judgment in the final appeal and everything like that. It was 8 or 7 years. It was a huge amount. So they just need to kind of light that wick, and then it can stay keep that time frame and continue to go back to it. So that's one of the reasons to also keep these records is, and it's data. It's $100 a year to hold this data somewhere. Don't just let it go. I just want to clean my file folders out. Keep this stuff for a long time.
Completely. And just to understand the psychology of an auditor, their job is to get as much money as they can to the state. And the auditor is going to consistently try to work as much as they can in the gray area, because that's where they have a lot of control. So, the reason why you do 8 years is they may say, yeah, we only need to do a 4-year look back, but the auditor can change their mind at any given time. And they have the law on their side. You may supply them with the correct data, but the auditor says this, that, and the other thing, or they find a discrepancy or delta. They're going to do things to try to, push, pull, get you off your balance, to see if they can't go and dig up some extra revenue. That's their job. That's what they're paid to do. Otherwise, if they're just an order taker, they could hire waiters or waitresses from restaurants. Their whole objective here is to find someone that knows to find the pressure points and to really go after and find extra revenue wherever they can carve it out. And so, our job is to do the opposite. It's to keep them at bay. So one person commented and said, yep, thanks, 8 years seems like a good idea. So, I mean, again, to what Jim had said, it doesn't cost anything to, $100 a year or whatever, just to store it, or you have your own, hard drive that you keep it all on, you keep with you. Make sure that it's something that will be fireproof or damage or, act of God proof as well, though, so that, if anything happens, again, if you lose the data, the state doesn't care why or whatever excuse you have. They're going to come after you to find it one way or another.
That's it. So if there's any more questions, drop them into the chat here. And then, anything else, Peter, you'd like to share with us? You think any kind of hot tips, hot takes on things? What do you think is going to happen over the next 10, 12 months in cannabis for tax-wise or for salt taxes and things of that nature? Do you see any kind of increases generally across the board? Give us your hot takes on a few things here.
So we're now starting to see the Northeast legalize. New Jersey recently. I don't think New York's very far behind. Actually, my home state of Virginia most likely will be decriminalizing this year as we've gone blue. And they've already put on the docket. Funny story on Virginia. It was originally a red state. And one of the big things here is the Second Amendment gun rights. Well, the two bills that were announced in 2021 was to put harsher, stricter laws on the gun side. And then the other one was to decriminalize marijuana. And the funny thing is that the entire state's in an uproar, fighting left and right over, the gun rights, but nobody's saying a single word about the legalization or decriminalization of cannabis in Virginia, which is an excellent sign. Yeah. Where I'm going with this is I think, Virginia's probably, 2 to 3 years out from legalizing potentially recreational. I think, Minnesota is showing signs of legalizing. They did some analysis recently of the constituency, and they found greater than 50% of the voter base is excited or interested around legalization of recreational marijuana. So the state's already begun to do their due diligence. And then some of the key officers of the state of Minnesota have also said, we've already implemented the plan that as soon as it becomes legalized to put up all the infrastructures from technology to data tracking to hospitals, et cetera, all the medical, everything, all that set up. So I would say Minnesota's starting to get there. Quite frankly, I think within the next 3 to 5 years, I might be crazy, but I think at minimum 80% plus of the states will be legally either medicinal and then potentially recreational as well.
Yeah, I think we're at 33 of 50 now, right? Like 32 or 33 of 50. It's a lot.
Yeah, and I mean, big key win on the East was Florida. Getting Florida, because that's kind of the doorstep into the Southeast. Mm-hmm. So seeing Florida go on board really, really helps push things along. Oklahoma's just been booming.
Oh, yeah.
They're just printing money right now on the cannabis side.
Yeah.
I think California has a problem. And I think that, and somebody actually brought this up because of the black market in California because of the taxes. So I think this is a case of a broke state. They're looking for the simplest low-hanging fruit to get their revenue. I actually honestly think that they're shooting themselves in the foot, and that let's play this recording a year from now and see if I'm right. But I actually think they'll repeal the rates in 2021. I think they'll have a down year in 2020 because of the fact that the excise tax is getting so expensive. There's a lot of competition in the black market right now. And so as a direct result of it, I think the state's going to hurt. They're going to try to strong arm as their first tactic. So they're going to come in, they're going to hammer everyone they can. But the problem is they're going to have to invest in infrastructure for law enforcement for the black market. And that's going to cost them a lot of money to do. Dedicating departments to that kind of stuff. Because this isn't going to be a federal thing. So it's not going to be DEA, it's going to be internal. Or ATF or anything of that nature. So what the state's going to have to do, eventually they're going to come to terms with the fact that they have no way to enforce this rate hike in the sense of being able to keep, to keep the buyers from going outside of the proper channels. So what I would say is in the case of California, I think you'll see a drop a little bit this year in sales because of the excise tax raising. But I see them in 2021 coming to a realization of the damage it did, and then repealing that and probably dropping it back down to the 2019 amount. And then potentially we'll see where it goes from there. They'll analyze it further.
Yeah. Or Sharon wrote in here, she's losing clients to the black market in CA, which is very, it's an obvious thing that's happening. If you're in the industry, it's very obvious that this is happening. And she wrote here, the Oklahoma clients' revenue are dropping because there's too many dispensaries. If you don't know what's going on in Oklahoma, you pretty much have to be a resident for 2 years, have $2,500 and a pulse, and they will get you a license in 6 weeks. And then you can become a cannabis business operator. So everybody is running to kind of grab their little piece of land and become a cannabis business dispensary, processor, cultivator, and anything of the like. So yeah, that competition is surely pushing the revenue per business down, but the state is just amazingly grabbing a bunch of money right now. I mean, they're kind of fostering the development. And one of the things that we wrote in a blog, not a blog, actually a printed article, it's going to be in the Oklahoma Gazette. I think next month is going to be, one of the trends we're seeing for Oklahoma is that their big operators are coming in and kind of getting ready for like national legalization. The labor is cheaper there, the licensing is cheaper there, it's faster, and the people cost is cheaper. Land, everything is cheaper. You're going to see a lot of processors go down there, cultivators go down there, and then export to all the different states. Especially there's, I think, a bill in the Senate now for states that are recreational can have interstate commerce potentially. That could open up a whole nother thing, So I think you see a lot of businesses going out to these cheaper states in the middle of the country. They're all going to start playing their parts. All start playing their role. Go ahead.
If I could chime in on the Oklahoma front, a couple of things to consider there, Sharon. First and foremost, if there's a boom, that's not necessarily a bad thing. What probably will eventually stem from this is if Oklahoma can prove themselves to put together a good product, you'll start to see what they call cannabis tourism come. And so you'll see people from outside the state come in and start partaking from there because it's a simple route, especially if the taxes are much cheaper there. It's closer to the East Coast. There's a lot of variables and metrics there to account for. What I would strongly advise you to do, oftentimes when you see an over-flooded market, you got a lot of people that may or may not know what they're doing in that market. And so one thing that you need to do is make sure all of your clients are fully compliant, for better or for worse. And the issue is that, what'll happen is a lot of people start to feel safe with their situation because they're just doing this all en masse. And so they haven't heard any audit requests or anything like that, so they think they're good to go. And so, what'll happen is, you'll see Oklahoma crack down in the next year or two, which is par for the course. They're getting it all set up, and then they're going to evaluate and see who's legitimized and who's not. So the key thing for your clients in Oklahoma, what I would say is A, stay the course. B, you need to make sure that you have no loose ends, because when the state starts hammering on people, and there's an old saying, when there's blood in the streets, buy. And what that means is that, when the auditors start coming out and they start hammering people and the businesses start closing down, all your clientele that did everything by the book, they'll be sitting very pretty. And as they close their competition around them, they'll be gobbling up all the extra consumer base. Yeah. So I would say on the Oklahoma market side, at least, the two components there will be, one, if they start to produce good product and it continues to gain a reputation, you'll see cannabis tourism come there. So you'll see an increase in acquisition. And the second thing is that it's not irregular when a market is flooded for the state to come in and clean out house and only sustain or keep the entities that have been fully compliant. And so that, from my perspective, will be beneficial as long as your clientele are able to hold the course.
That's it. And then Sharon also asked what's going on in Arizona. It's up for recreational legalization in 2020. I don't think it'll be any problem. I think they hit like a 48%. They was like very, very close in the 16 election. They've got medical now. You're seeing big players come in and kind of just getting ready for the infrastructure. Like, it's only a matter of time. The dominoes are going to fall for every state. I mean, once Texas really opens up, it's over. I mean, everything's going to go. It's going to be a kind of a wild race. But yeah, we've got some clients that are kind of moving a fair amount of capital into Arizona right now and being just waiting. They know it's coming. There's like the land of sun. They can start to go and do green infrastructure. Land is cheaper. It's going to be a lot of opportunity, especially in the South. Saying we should have a webinar with you too. What to look for in cricket for our business owners.
Oh, I can help you on that one. You and I, Jim, we could just tackle all the world's problems.
All day event, man. That would be like, I got a 8 hour long marathon podcast.
Joe Rogan style?
Yeah, exactly. It would be an intense one. I mean, we'll kind of round it out here, I think. But one of the things that, like, the legacy players are really kind of feeling the pressure of big business come in, and they think they can pull fast ones. But I want people to understand, you're not building a corner store. You're not building, a house to kind of like hang out and sell cannabis out of. You're building a legitimate pharmacy here. It's a very highly regulated industry. There's a lot of laws, there's a lot of regulations, there's a lot of fees that come along with this. So I know we get a question all the time, like, why does it cost so much to start a cannabis business? It's like starting an airline. Why aren't you complaining about how much it costs to start an airline or how much it costs to start an automaker? Those are even better businesses to be in, essentially, with the amount of profits you could be in. I don't know about airlines, but surely the audio industry or any other business. It's very expensive to start most businesses, but this one's got its eyes on it. People think there's a green rush. It's a green drip. There's not like a ton of money coming into the pockets of the business owner. There's a lot of venture capital coming in. There's a lot of media hoopla around it, but I don't see that actually maps properly or congruently to the business results that are actually we're seeing for owners that are not coming with a lot of experience in there. Like, you make one mistake in cannabis, it gets exploited and expanded out so quickly. One or two bad harvests for a cultivator could mean the end of your business. You make one bad tax mistake, you don't remit your excise tax, you get a 50% penalty as a distribution business. Good luck. You're pretty much over with. It's that cutthroat in the industry right now. So, that's my hot take on it.
Yeah, I'll give you 2 points to look for on the crooked fraud side too as well. First thing is, whenever you buy anything cannabis and you don't have a medicinal card, so you're buying recreational from an area, everywhere it's sales tax. So if they're not charging you sales tax, they're not registered with the government. It's a local entity right out of the gate that tells you what you need to know. For starters. That's the first thing. The second thing is, ideally the business has a name, it's incorporated. You can always look up a business, an LLC, an incorporation. That's public domain, public information. So you can always look them up and see what they are. When you look it up, it's going to identify based off what they call an NAICS code. That dictates the type of business it is. That's how the state can figure out what you're doing. So they're going to evaluate, what you'll see is it is, Jane Doe's Dispensary LLC, and then NAICS code 055 or whatever. That tells you, which, when you look at the categorization, it's a retailer, it's a brick and mortar retailer. So yes, they're registered with the state, they're legitimately there. And then when you can see if they're charging sales tax on recreational, that'll tell you, those are the two things that right out of the gate will tell you everything you need to know.
That's it. Well, Peter, thank you very much for your time today. It's been a great past 3 weeks sharing all of this information. You've got a wealth of knowledge, and I'm sure there'll be many more presentations between us two over 2020 and going forward. It's going to be a good long-term relationship. I appreciate everything that you share with us in the community this week, the past few weeks.
My pleasure. Thank you for letting me be here. Great group of people, great questions, and it was a lot of fun doing this.
Yeah, one last thing here. I'm just going to put this last slide up. So greengrowthcpas.com/CannaTaxware. CannaTaxware, give us a little, a few minute plug here about what you guys are doing on CannaTaxware over there.
Yeah, absolutely. Actually, we just had an amazing week last week out in MJ BizCon, where we were partnering with a lot of the point of sale systems and other such, including Microsoft reached out to us too on this space. So CannaTaxware is an automation sales tax solution. So really what we're looking at here is that, to be able to figure out the calculations of where you're shipping to, especially if you're doing delivery-based sales and other such, that's where we come into play. We have the rates. There's over 14,000 sales tax jurisdictions in the U.S. We have the rates for all 14,000. We connect directly to your point of sale system, whatever you're using. And so you're able to do an automatic rates call at the time of the transaction, so you have the real-time data. And the second thing we do is we automate your filing directly with the state as well. So whenever the state dictates your filing frequency, when you need to remit to the state, this software will remit directly for you on your behalf, so you don't actually have to go and fill out a 5-page form every quarter that'll take an entire day to do. So really what our software does is it streamlines the sales tax calculations and then automates filings, especially if you have a business that's operating multi-state. We really make life a lot easier. And then for other businesses, this is an automated software, so that leaves and removes a lot of human error and a lot of problems. So, this is really where our niche is, and we've been working with a lot of people.
That's it. All right. Again, Peter, thank you very much. I appreciate the time and more things to come.
Thank you, Jim. Pleasure.
All right, have a good one, y'all. We'll talk to you guys soon.